When I was outside, everyone was telling me, now is the panel with a lot of money. So, if you have so much money, it must be a very interesting discussion. The domestic investor view, Greek institutional investors on opportunities ahead. I leave you in the hands of these excellent speakers, moderated by Mr. Ilias Koimtzoglou. Iliamu, please introduce your panelists.
Thank you very much, Ms. Pornoze. It's a great pleasure and an honor to be here. So, welcome everybody. My name is Ilias Koimtzoglou and I'm the managing partner of KBVL law firm, which is the member of the Legal Network for Greece. It is a pleasure to moderate this important conversation on the evolving landscape of institutional investment in Greece. Over the past decade, Greece has undergone a remarkable transformation. After a prolonged period of economic recession and political turmoil, the country is now walking firmly on a path of growth, stability, and increasing investor confidence. Greek companies are increasingly becoming extrovert. They are increasingly looking outward. They're scaling their operations. They are exploring international markets and attracting significant foreign investment. At the heart of this transformation lies the critical role of domestic institutional investors whose insights, capital, and strategic guidance are helping shape the future of the Greek enterprise. Today, we bring together a distinguished group of leaders representing the forefront of Greece's private equity, venture capital, and institutional investment community. Each panelist brings a unique perspective on the opportunities and challenges facing Greek businesses and investors as they navigate a rapidly changing global environment. Allow me to briefly introduce our panelists. Eleni Bathianaki is the managing partner of Halcyon Equity Partners, brings extensive experience in cross-sectoral investments and a deep understanding of what it takes to identify and nurture the best of Greece. Her insights into the role of local institutional investors and Halcyon's investment strategy will be invaluable as we discuss Greece's competitive positioning on the international stage. Nicos Koulis is the managing partner of Diorama Investments. He has successfully steered one of Greece's most prominent private equity funds through periods of significant change. Nicos's perspective on adapting investment strategies to a new, more competitive environment will help us understand how Greek private equity firms continue to thrive. Nicholas Chryssanthopoulos, senior partner of EOS Capital Partners, is at the forefront of Greece's dynamic private equity and venture capital scene. With EOS now raising its third fund in infrastructure and green transition, Nicholas will share his views on the evolving market dynamics and the future direction of private investment in Greece. Last but not least, Grigorios Koutsogiannis, CEO of IFA Group, brings a wealth of experience from the defense and industrial sectors. As Greece embarks on a landmark 12-year defense procurement program and deepens its participation in European and transatlantic initiatives, Grigorios' insights will shed light on the intersection of defense, innovation, and industrial growth. Our discussion today will focus on several key themes. The role of domestic institutional investors in supporting Greek companies' international ambition and their interaction with global investors. How investment strategies are evolving in response to new opportunities, increased competition, and shifting market dynamics. The impact of a growing private equity and venture capital ecosystem on Greece's investment outlook. The potential for Greece's defense sector to become a hub for innovation and industrial growth, both regionally and globally. The importance of cross-sectoral approaches, key differentiators for attracting international capital, and the strategic rationale behind new investment verticals such as infrastructure and green transition. Let me start the round of questions with Eleni Bathianaki. Eleni, Halcyon's investment strategy focuses on investing in the best of Greece. What does this entail? What is the main rationale behind this cross-sectoral approach within the pool of investment opportunities currently in Greece? What are the common characteristics and key challenges faced by an institutional investor?
Ilia, kalimera. Thank you everyone, and thank you for the amazing introductory comments. It's great to be here again I think for the sixth, at least for me, consecutive year, presenting a very growing, dynamic, but yet challenging environment, that of the local private equity investors. We, Halcyon, we are a growth private equity fund that we have decided to invest in the best of Greece across a number of sectors. Within the first year of our investment strategy, we have invested in 5 companies in 5 different sectors: logistics, technology, consumer, non-food, food, technology. And the idea of what is the best of Greece essentially entails 3 things. We're looking for high growth industries. We're looking for companies that have durability and have leader characteristics within these industries. So their technology or their service or their actual product has excellent characteristics. And of course, the most important thing is the scalability feature. I mean, there needs to be an element of growth that these companies can really grow outside or within or outside Greece. Why do we invest in the best of Greece? Because I think these companies have the ability to essentially become from small mid companies to larger ones, and at the end of the day, attract international investors' attention. Now, the sector-agnostic approach, for us, despite the fact that it really requires the understanding of the different industry fundamentals, it entails different strategies because different industries have different drivers for growth. It was an essential part of our investment strategy. As a result of, number one, we want to have a well-diversified portfolio of investments for our investors, for our LPs. Within the size of a 200 million fund, this essentially translates to approximately 10 to 12 investment companies. So it entails a well-diversified approach in terms of what risk and reward you can expect. On the other hand, I mean, it is quite important to note here that a few years back, most of the local private equity funds would say that at least half of the assets under management will be directed to F&B. And this was an approach and an investment strategy that it was more or less one-way street because we felt like these were the more international, export-oriented companies. This has changed a lot over the last 5-6 years. And I think my view is for 2 main reasons. Number one, we've seen a number of very successful cases across a number of sectors. Technology is one, consumer non-food is another, logistics. So we've seen a number of very nice companies and transactions and exits happening. And I think another very important pillar has been the work that has been done from the gentleman next to me and all the local teams in order to educate this market. So we have spent a lot of time going to different regions, to different sectors, to different companies, and identifying real gems in sectors that you wouldn't expect Greece to have a great potential. So this is the main, for us, rationale behind a sector-agnostic approach. Now, the common characteristics, I guess, across all sectors is that we're looking for founders with passion and vision. We're looking for excellence in terms of product or service, and we need to have a real growth potential. And I think your last point on the challenges, again, this goes across all sectors. I believe that number one is the transition to new governance standards. These companies are primarily family-owned, family-run, so you need to have this transition to a more professional run model. The second one would be the approach towards risk. Again, we're talking about successful companies where the founder has managed to work well, to have a solid base. So taking a more aggressive approach towards the expansion of the company is something which is a challenge. And thirdly, I think is in cases where needed, to onboard management teams to execute these business plans. So I think I've covered all the questions.
As always, yes. Nico, coming to you, the first Diorama fund was very successful, but it operated in a very different Greek environment than today. Today, you are faced with new opportunities, but also more competition and new challenges. How do you adapt your strategy and modus operandi in the current environment?
Thanks, Ilias, and thanks, Nico and Olga, for inviting me once more here. You're exactly right. But, financial services, including the providers of equity and debt financing, we exist only for the benefit of the so-called real economy. So as we consider how we allocate capital, which that's what we do effectively, we need to take into account the particular situation of the economy in which we operate. Back in 2014, when we started Diorama 1, the Greek economy was in a very precarious situation. Good companies did not, with solid management, good products, were in desperate need of capital. They needed money to upgrade their capital equipment in order to expand the capacity, sometimes even for working capital. So we established a growth fund because that's what the market wanted. And we teamed up with some very good companies to help them grow and thrive and eventually do what they were supposed to do. And we're lucky, we're fortunate, we did very well. We're being told by our institutional investors that we end up in the top quartile. We return a little over 2.5 times money to investors. We're fortunate. But as you said, things have changed. Now it's a different economy, thank God, much, much better economy, which provides opportunities but also challenges to us. One of them is we have increased competition. As we grew, and now we can look at companies that have an EV of 100, 110, 120 million, we face competition not only from very good quality Greek funds, as the ones next to me, but also from, we start bumping into some of the larger private equity, international private equity funds. We actually have seen this. We've seen competition from the big boys. So this is a challenge. But the good news is that in Greece, there is a need for good intelligence structured equity. There is still good opportunities, very, very good opportunities. In fact, we have what we say to our investors, a great great pipeline, and I'm sure that applies to all of us. So in this situation, how do we deal with this, as you ask? We have to change, obviously, what we do. We are doing what we call a buyout with a twist. This is based on the following. There are some companies, many companies actually, that are good companies, and they have the owners, they want to maximize, obviously, their equity, but at the same time, they don't want to have all eggs in one basket. So if we like the management of the company, we're going to say, why don't we sell us 50, 60, 70% and stay there, continue managing with our help the company. So we buy them at a fair price. It's not a top price, but we help them significantly in what we all do in our link of value creation. We bring new clients, you improve the company, we do a bunch of things in order to substantially improve the EBITDA. And if we do our job well, then they are going to take let's say, in the next 30%, they may get even more money than what they got when they sold the 70%. So this is something that we find out that works well. You need to have discipline, but it does work well. And the one benefit that we have, being the oldest of the new funds, is that we have now a number of CEOs from the prior funds that can actually attest to the people who say, yes, they did help us, they did this and this and that. So it's not as sort of selling ourselves, but you can hear from the people who work with us and they attest that they work. So that's how do we deal with the challenges. And we're very, very optimistic about Greece and about the sector.
Thank you, Nico. Nicholas, EOS is now raising its third fund in a totally different space, infrastructure and green transition. How is the fundraising sentiment currently, and most importantly, why did you choose this specific vertical?
It's very good to be here as well, and especially with friends. Now, European fundraising is in the last few years has been quite tough. It's not fun to be a European GP. The funds raised are more or less stable, but they go to the bigger names. So the mid-market is in pain, I would say. And that also would apply to smaller markets like Greece. But there are some positive news. One is that in terms of overall situation, there is some good news on inflation, some good news on the markets. And most importantly, the public policy is shifting and pushing themes like infrastructure, defense, AI, and reindustrialization. So that definitely helps, and that's why we've seen that in terms of fundraising, the verticals that really get the most money are infrastructure, private credit, and of course buyouts, which is always a theme. So in general, I would say that if you apply that to Greece, then it becomes an easier story. Greece hasn't seen significant investment in infrastructure for quite a few years, especially due to the underinvestment in the crisis years. But it's a thematic where we know how to do the job. So the players in this space are very educated. They have applied very sound structures that survived the crisis years, both from a debt and an equity perspective. And that makes us confident that there is the basic ingredients in the country that allow for comfort around this space are there. And of course the macro, which as we heard before, is improving, and it gives further tailwinds. On top of that, we see that there are tangible projects in the next 3 to 5 years that I would say need probably 70 billion of funding, of which 12 to 15 should be equity. And that equity is not exactly there. I mean, you have strategic players that are going to definitely make these projects work, but having minority partners such as ourselves and others would definitely be useful, because that leverages their own equity and it makes the velocity faster. So that's something which we see as very important. And given that we have the RRF with probably another year ahead of it, and the structural funds then for another 3 years, probably going to be a front-loaded investment plan. And I think that's why we chose the specific timing to raise our own fund. And finally, it's a very nice product for institutional investors. It's low risk, decent return, predictable cash flows. So this is something that we think that has been missing from the market, and now is a good time to offer it. So we'll see how it goes, but obviously we're quite excited about it, and hopefully it's going to broaden the space, and it's probably not the last product that's going to be brought to the market. We will probably see the market evolving in different verticals in the future.
How can Greece leverage its landmark 12-year defense procurement program, 2025-2036, to not only strengthen military deterrence, but also accelerate the growth of its national defense industry into a global innovation hub?
Thank you, Leah. Defense and the defense industry is a little bit unique because you have a lot of geopolitical extensions when and how you do business. So as the US government keeps saying, Greece has been and is a regional geopolitical pillar of stability and a partner even through the most difficult times of Greece. So we need to use that to the benefit of the industrial base. Essentially, we need to rebrand Greece to attract technology firms through the creation of a stable, innovative, and secure environment. Not only looking at this from a national perspective, but more global. In my opinion, there are 6 tenets that you need to look at to do that. First and foremost, we need to kick off and re-energize the defense industry through the mandate or by law of local participation into large procurement. There is a 25% requirement However, doing that by passing through commodities or low-tech programs doesn't help. It just makes you compliant. We need to push for real transfer of technology, co-development and R&D, and push the OEMs to include the Greek industry to their supply chain, to their global supply chain, and make that a contribution towards that 25%. In addition, force strategic alliances with other nations that will flow down to the industry. Secondly, when it comes to Greece itself, we need to make Greece a regional hub for both products and services. And we can cover, as a country, Southeast Europe, Middle East, and Africa. And we need to see the market again holistically, beyond the national borders. That's the only way we can create a sustainable market. Then, we need to create a friendly environment for the industry to operate in and also collaborate with academia and R&D through the creation of a stable framework, technology parks. Then you can have tax incentives and tax breaks for R&D and also fast access to national and international programs. Another important factor is human resources and the human capital of the country. Of course, we need to create specialized training programs into new technologies like AI, robotics, composite materials, and cybersecurity. And yes, we need to bring back Greeks to Greece that have the experience, but at the same time, we need to prepare our own talent and make them the incentive for the industry to come to Greece. There are a lot of initiatives. There are government initiatives, EU initiatives, and also a lot of private investors. So the creation of a national defense innovation fund would definitely help and focus in high-impact technologies like C4I, AI, autonomous systems, optronics, etc., and in general follow what the end users are asking. Become the enabler for these network capabilities. And then closing, I think it's extremely important to actively promote Greece as a global defense innovation hub and show in action that both government and industry are willing to support and, more importantly, are willing to invest to make this happen.
Good.
Thank you, Grigori. Second round of questions. You need to be slightly faster.
Super quick.
And we start with Eleni again.
Yes, no answers.
Many Greek companies aim to scale either organically or through M&A in order to eventually attract foreign investors. What is the role of local institutional investors in helping these companies develop the right strategic and operational approach for international markets? How can local institutional investors facilitate the transition? And what is their role vis-à-vis the international institutional investors?
I'll make it 3 in 1. The answer, and I'm going to be super quick. I think we play the role of the bridge. So for some companies, this route can be done alone. For other cases, there needs somebody to surface the opportunity, enable, and play the role of the catalyst in this journey. So obviously, one role of a local private equity is that, to essentially add value and by leaving value on the table, transfer all this to an international investor. But I think we have a second role, that of a co-pilot. Yesterday at Endeavour, we referred to country being a pilot. I think local private equities can play the role of co-pilots in a sense of playing the role of the local co-partner alongside large international private equity funds that may lack local infrastructure, not being able to have people on the ground. Even culturally, there might be a misalignment. So having somebody on the ground that they can trust, they know that they can run the due diligence, adhere to the business plan, and be there next to the company, it's actually a win-win situation, because even for us as local private equity funds, we have a lot of learn from pots of money that have a multi-market exposure, and at the same time we bring them this credible partner.
Fast as promised. Nico,
Yeah.
given the increasing competition for capital and the trend of fight to quality among LPs, what are the key differentiators that Greece-based private equity firms need to demonstrate to remain relevant and continue attracting international investors?
Good. Yes, it is true that there is a competition. This is mainly driven by the relative inability of existing funds to sell the company. So if you don't have DPI, the investors, Greece has one advantage, and this is we should commend HDBI because it has played a huge role in supporting and growing the Greek infrastructure system. But I think the answer is not about Greece. The answer is about private equity, and this is results. If you deliver results, if you do well, the investor is going to come back. If you don't, it's an upskill battle. So I think that's a good news, because if you do your job right, you're going to get the money back. Fast enough?
Faster than Eleni.
Sorry.
Nicholas, it seems that private equity and venture capital scene in Greece is picking up momentum with more and larger funds entering the market. Is that positive or negative for the outlook of private investments in the country? What is your experience at EOS, and how are you adapting your strategy to manage this evolving dynamic?
The market has grown a lot, at least fivefold since 2017, 2018, mostly because of the RRF funds channeled by HDBI, but also because of the private actions that brought, real private investors to the table. So that's very positive. It helps the market mature. It closes the different parts that need both in sectoral focus, but also in terms of size and type of transaction. So hopefully this will continue, and it will allow better skill sets, and it will also allow some flexibility on exits, because we will also need some help when we try to sell, not only when we buy. And that's why I think if you want to change the playbook slightly to be more relevant, then you just need to maybe deep dive a bit more, have some more operating partner expertise supporting the companies, maybe trying to build bigger companies, bigger platforms that appeal to international investors. But the ingredients are there, and I think we're going in the right direction.
Thank you. Grigori, last question to you. In what ways can Greece's active participation in the EU initiatives such as SAFE and Readiness 2030, combined with industrial partnerships in the US, reshape its role within the broader European and transatlantic defense ecosystem?
So you're asking me to be fast explaining and describing bureaucratic concepts. Thank you. It's a little bit unfair, but I'll try my best. All right, so 20 seconds, yes. Okay, pressure. So listen, SAFE is a great mechanism. It actively promotes joint procurement on large defense program. I think the key point here is for Greece to try and create consortia with EU primes while exploring the existing ties with US industry, to help open up third country markets and leverage capability and shared IP. With regards to Readiness 2030, it's a huge initiative for the European Union. It's all about the autonomy of Europe in defense. And what's important there is Greece can play that role, can help while maintaining a NATO interoperability, and through the industrial ties and that dual alignment can help promote that in both sides of the Atlantic. Basically, what we want Greece to be, I think, in my opinion, Greece can be a real partner and not a competitor as we move to joint programs. And closing, I will say what I said earlier. It's important to try and create an environment, as I said before, stable, innovative, and secure, so that industry can thrive in. And through the EU alignment for defense and the ties with the US, we can convert Greece to an integration center and a gateway to the emerging markets.
Thank you very much. You have been excellent.